Okay, cool. So I want to make sure, can everybody hear me? Can everybody hear me and see my screen? Two most important things. Awesome. Okay, cool. Um, Great. So we have a really, really good lesson ahead of us today. It's supply and demand concept. So we're going to talk about everything that I know about key levels that I use every day. So I'll tell you guys pretty much everything I know. Um, Now it's I'm calling it a mini lesson because I'm not gonna be able to cover everything today. I'm only gonna be able to cover like certain things because obviously like in 30 or 45 minutes we can't get through everything supply and demand, but we're gonna get through everything that we can within the next 30 to 45 minutes. So game plan is to cover supply and demand concepts, talk about key levels, talk about the differences between the two, how you chart it. We're gonna go through probably maybe 15, 20 minutes worth of like actual presentation stuff. Then we're going to go off to some charts, and another 15 minutes will be going over charts and stuff. So we have a couple of charts I want to go over. We're going to go over Tesla, SPY, and Amazon. So if you guys want to now, what you can do is you can go ahead and you can chart these tickers. So you can chart all three of these tickers, Tesla, SPY, and Amazon, while I'm talking, going through a presentation today. And then when we go over it, you're going to have these. Oh, I'm showing you my level. I should be showing you my levels. Then you're going to have your own levels to work off of and see if they match mine. So that's a good practice that you can do in the next 20 minutes or so before we get to it. One thing I want to say is last lesson we did it on like tips to grow a small account, and it had like a whole bunch of views because I think somebody took the recording link and then gave it out somewhere. So I I'm not like a terrible person. I want you to be able, I want everyone to be able to watch this video. So I'm gonna post a recording to this, but I'm going to delete it after, I think after probably Monday, after Monday or Tuesday. The reason why is because I want everyone to have a chance to watch it over again if you missed it, but I don't want to keep it for too long because I know it's going to be reposted again. Same thing happened last time. So I just want to try to mitigate that as much as possible. I hope you guys are all understanding of that. Um, Now, does anybody have any questions before I get started at all? Before I jump into it? Any questions before I go? And then last thing, is my Wi-Fi okay? Am I chopping in and out? Hopefully it's not too bad. Can I get a yes if it's okay? Yes. Good. Okay. Some because are using sunblock. I am. It's just the sun's ridiculous here. Awesome. Okay, everyone's ready to learn. Everyone's ready to get started and jump right into it. Okay, cool. All right. What stocks? Okay, that's a good question. Awesome. Um, all right, cool. So game plan today is supply and demand concepts. You guys already know it. It's a mini lesson, probably 30, 45 minutes. We're going to get into it as quickly as possible and go through everything I know about supply and demand. Um, Without further ado, let's actually move to the next slide. So how do you trade with support resistance levels? That's the game plan of today. And we're going to talk about what you do in a chart. What the actual process is for me. I hate the fact that this is zooming in. I don't like that, but that's okay. We're going to go through that start to finish. The general idea is you're looking for these areas, right? Areas where you see actual inflection points, actual price interest. A stock pumps up to a key level and then reverses, showing you little struggle points. The idea is that how I look at it is I look for struggle points in a chart, areas where there's clear price interest. The stock pushes up into that struggle point. It sees a little bit of struggle there, then it pushes through it, turns it into a support, then it turns into a demand at that point, and then rips up higher off that level. The idea is you're looking for little struggle points on the chart to indicate whether it's a support or a resistance. And that's what we're looking for. Trust me, this is not a chart. This is literally just an indication of what I look for. This is probably the worst example I could possibly show you guys off the bat, but we're going to start off with this and we're going to go off to more clear charts in a second. So why do levels matter? That's the first thing. Like, what's the whole important? Like, what does it even mean? Like, why does it even have importance? Well, levels matter because of two things: institutional entries and retail entries and exits, right? There also be a little slash there. There should be exits as well, right? Institutional exits and retail exits, right? They're just looking for levels where they are exiting and where they are entering. Because when a stock bounces between a low and goes to a high, and bounces between a low and goes to a high, it becomes very clear that people are buying here and they're taking profit here, selling here. They're buying here and they're taking profit over here. And stocks generally like to move between a zone A and a zone B, a zone A and a zone B, and a zone A and a zone B. The reason why stocks don't like to move a lot, right? They're not meant to move a lot. Stocks are meant to have an intrinsic value, a book value, and they're meant to maintain that value for as long as possible. And usually they will stay within a range. An advanced topic for you guys, if you want to learn about it, is called the AMT. It's called the auction market theory. The auction market theory talks about the idea that stocks like to stay in range. They don't like to break range because theoretically it should not break range. A stock should be a particular value and stay at that value unless something intrinsically changes about the company. So let's just say Tesla, the way it is right now, it should theoretically trade at the same price throughout the entire day, not change at all, unless something were to change in the stock that, it fundamentally changes the value. Let's just say there was a class action lawsuit against Tesla, or maybe there was, I don't know, retail sales came out higher, which shows that buyers are strong, which shows that maybe they'll have higher car sales. Like things like that will impact the price of a stock. But generally speaking, the price should stay relatively the same. But you guys know it's not the case. Stocks like to bounce at a low and reject at a high, bounce at a low and reject at a high, bounce at a low and reject at a high. And that's the whole premise of support resistance, is looking for these areas where there are sellers stepping in and where there are buyers stepping in, because that's going to help us create a game plan for how we trade, right? Because we know that if we are approaching a resistance, we know that we're not buying into that resistance because it can just as easily reject off of it. And we also know that the only way we're going to buy calls on a stock that's coming into resistance is if it breaks above it, then retest it as a support. And that is where we get in long for a break and retest entry. This is the only reason why I care about support resistance, is because one, it helps me find my entries for break and retests. And two, it helps me find my entries for bounces and rejects, right? So if I'm looking for downside plays on, let's just say this is a SPY chart, well, the only way I'm going to buy a put on SPY is either going to be here, or it's going to be a break below that support. Those are the only two ways. The same goes for buying a call. I know it's only going to be here, or it's going to be a break and retest of its resistance. That is why support or resistance matter. And the only reason why we even look for it is because it helps us determine where buyers or sellers may be sitting. And then two, this is probably even more important, what may happen next if this level is broken. This is super important because people often, you have to understand the idea of AMT to understand this. Auction market theory talks about the idea that basically stocks move between levels, between ranges. And when a stock breaks above, let's just say there's a level here. Let's just say you have a level, a consolidation, right? A consolidation on Tesla. Well, it should stay in this consolidation. It should stay as close as possible to that middle value, right? That middle value, that average value, and maintain that range. But if something were to change in the stock, let's just say it broke above this resistance, well, then theoretically, what's usually going to happen, vast majority of the time, is it's going to go to that next level of resistance, that next area of resistance, or the next area of supply. And that is what matters to me the most, because for me, yes, I may be looking for rejects at this area, at this resistance, but I also will be looking for break and retests to go long. So I know if I'm looking for a break and retest, I know what I'm looking for is for us to get above, right? To get above this resistance, because if we get above it, we're going to move to that next area of resistance. It moves like a magnet. And that is why we look for support resistance, because it helps us find those magnet areas, which helps us bring to our next level of resistance. Saying it many times there, but that's why it matters. Next slide here. Key metrics. Let's actually get into what I look for, right? So there are four sort of terminologies you need to know. The first terminology is support. And this is where a level or an asset class finds buying interest, preventing it from falling further. Resistance, this is where a stock, right, a stock or an asset, whatever it may be, it could be anything, encounters selling pressure, right? So historically, it encounters selling pressure. So how this would look visually is you see, you would call this a floor, right? A floor would be a support, right? And a ceiling would be a resistance, right? This would be a clear resistance level. So you know that this is a resistance where there's selling pressure coming in, and this is a support where there is buying pressure coming in. Now, this translates right over to are supply and demand. So support is the same thing as demand, basically. The only difference here is that instead of it being one singular level, right, one singular level here, it's going to be a zone. So let's just say we have that same chart, right? But let's just say maybe it looks a little bit like this, right? Where you could see that there is a demand here, maybe two different demands here, maybe two different lines here, but they're very close to each other within $1 or two. And that for me is going to be one singular demand zone, which is going to be one box in my chart. That is what demand is for me. It's the same thing as support, but it's going to be a zone rather than just one particular line on my chart. Resistance is the same thing, right? So resistance translates to supply. This basically means, right, the same sort of resistance chart over here. You can see it over here, but it's going to be a zone rather than a singular line in your chart, right? So it would look like this. You have a little zone, like a little, maybe a resistance maybe here, but then you can also see there's another level right on the top, and it's not perfect, but the idea is this would be one zone. And the reason why is because it's within $1 or two. It's within the same vicinity, and for that reason, it's going to constitute as a supply. Because you guys know, not everything's gonna be perfect, especially with trading, right? You're gonna have your stock bounce off of 140, but then previously it bounced off 139.50. So what we're gonna do is we're gonna create a zone, a 50-cent pocket of demand in that area between 139.50 and 140. The reason why is because it is still that within that same vicinity of that initial support, right? So remember, support and resistance, you guys know what that is, but how it translates over to supply and demand is they're just zones. Rather than it being a one line, it's just a zone or two different levels. Okay, so let's go to our next slide, and we're going to talk about what defines whether a level is key or not key. And trust me, guys, I know you guys are probably wanting to go over some charts, and we're going to get there, but we have to go through this stuff first. Then we're going to be able to go to actual charts, and we're going to show you really what I look for on a real live chart. So the simple answer for what defines whether a level is key or not is if other people agree that there is clear price interest in your zone, right? Trading is not meant to, this is an important concept. Trading is not meant to be a game of creativity. You don't have to be smart at all. You really don't have to be smart at all. The whole goal about charting key levels and being a technical analyst is you're looking for areas that have the most obvious respect, right? Looking for the most obvious levels, because those are the levels that are most respected. Remember, the reason why levels are important is because they are retail entries and institutional entries and exits, right? We're just looking for where other people would normally sell and where other people would normally take profit, because that is going to be defining whether it's a key level. And then we're going to use that level as our basis for trading plan. That's all that matters here. So now we're actually getting into the nitty-gritty. So we're going through basics. Now we're actually going into the more advanced topics of charting mechanics. So there are three things that I look for. The first thing is I'm looking for areas of clear price interest. 2 to 3 wicks is the general requirement for a support or resistance line. This is the first rule, right? The first rule of me charting a level. It's the first thing I look for. The second thing I look for is a concept called a parabolic move system. You can call it whatever the hell you want. It doesn't have to be parabolic move system. It could just mean impulse move or some sort of large move. And what I'm looking for is when a stock, right, does something like this, where it is, let's just say it's trending down, right? And then all of a sudden it's trending down. And the next thing you know, it impulse moves down like this. Well, regardless of the fact that there are wicks right over here, right? Wicks right over here in the top left corner, there was a very aggressive impulse move down. That impulse move down off this key level is going to act as a major area of resistance next time we pop back into it. The reason why is because you tend to have a lot of unfilled sell orders sitting there because it moved down so quickly. There's going to be a lot of unfilled sell orders sitting in the zone. So you know if it pops back into it, you're going to see a sharp reversal off that level. So even if there's only one wick, right? Even if there's only one wick off this level, it's going to be a key level for me. This is you can call it an inflection point, you can call it a parabolic move, you can call it whatever the heck you want. But the idea here is that there are two major things I look for. Thing one is going to be where we have 2 or 3 levels of interest, right? This would be a clear resistance. This would be a clear support. And the second thing I look for is if we don't have that, but we do have, let's just say we created an all-time high, the next thing you know, we see a sharp reversal off of it. Well, even though there are not multiple wicks here, you can come over here and say, well, yeah, there's literally one wick there. It does not fill your requirement one, but this does fulfill requirement two, which is the fact that we have a parabolic move. A parabolic move just means a big ass shift in the market, right? A big move down or a big move up. It could be the same thing to the down to the upside. So if we're trending down on a stock, right, next thing you know, we see a very crazy impulse move up, creating a strong pocket over here. Well, next time we come down, it's very likely this is going to act as a big area of support. And that is not because we have multiple wicks here. We literally have one wick here. The only reason why this mosquito is in my face, the only reason why this is important is because we have a very aggressive impulse move off of it. I call it a parabolic move system. You can call it whatever you want. I don't even know where I got this from. I think I got it from another trader, to be honest with you. You're just looking for big shifts in the market, right? That is what I look for. The third thing is zones of price interest. So this is not its own, I mean, it's technically its own individual rule, but if I see that there's a lot of choppiness in a level, like let's just say there's a lot of choppiness here, like obviously there's no, like you could draw one level here, maybe one level over here, but it's not clear. So what I'm going to do is create just a big pocket over here, right? I'm going to call this one big zone, just like supply and demand. Same thing. If I see a lot of consolidation in one area, I'm going to call that a support or resistance. Okay, those are the mechanics. Now what I want to do is I want to go into some actual charts with you guys. It's 7:21. We spent about 15 minutes going through presentations. I want to get through some actual charts because I think this is what's going to provide the most value. So the first thing I want you to see here is I want you to see rule one, which is our level, our basic level. You have multiple wicks. You have wick one, you have wick two, you have wick three, right? Wick four, wick five, right? This is a basic level, right? You know that if we get above this level, we're going to see the next area of resistance, which is back into 450, which is this level. If you get below it, you're very likely going to see this level. If you get above it, you're very likely to see this level. This is what I look for, right? I look for areas where there are multiple wicks off of one area, right? One area, one vicinity, creating a pocket or a key level. This is the first requirement for a key level. And that's why we have this chart at 444. One thing you're also going to notice, and we're going to talk about this in a second, but I like to use psychological levels. Psychological levels are just whole numbers, right? So you see how right now this is 444.04. To me, I'm not going to consider that 444.04. I'm going to consider it 444, right? That's the key level for me. The reason why we do that is because if you are an institution or even a retail trader, and let's just say you want to buy $1 million of SPY today, right? You're saying, well, I want $1 million of SPY today. And let's just say the stock is trading at 446 at that particular moment. What you're going to do is you're going to set bids, right? You're going to come in, you're going to set buy orders at psychological levels, or you're going to code an algorithm to say, okay, well, if you pull back to 444, I'm not going to have buy orders on the table, but if we do pull back to 444, I'm going to have buy orders on the table. They're going to come up at that psych level. That's what I do. That's what people tend to do, is they tend to focus on psychological levels. It's just a good metric, right? 444.04. I mean, it's just too specific, and it's not really gonna be good. So you want to adjust the whole numbers. On my chart, I always have it not adjusted whole numbers, but when I'm actually trading, I'm going to adjust it to that nearest whole number. Like this, for example, 449.72. To me, that's 450, right? I'm not going to call that 449.72. I'm going to call it 450. Okay, so psychological levels, multiple wicks. That's all I'm looking for here. You guys can see it. You can see wick one, you can see wick two, you can see wick three. At this point, once I see 2 or 3 wicks off a key level, it is now a key level. It is now determined a key level. So now I know that if we break above it, we're likely to see upside back into the next area of resistance, which is known as the magnet, right? This is the magnet effect, right? We get above a level, we move to that next level, right? And then we get above 450, we're very likely going to see back into that next area of resistance, which is back into this 453 area, right? You can see here, this is what I'm looking for. The second rule, which this is rule one, right? That's rule one. Rule two was parabolic move. So you can see here that the only reason 443.50, and if it's in the exact midpoint, like 443.40 or 443 and change, I'm going to consider I'm just going to use the exact level. I'm not going to round down. If it's like 443, if it's 433.50, well, I can either round up or round down on this. So I'm going to choose to leave it exactly where it's at, right? If it's like 443.20 then yes, I'm going to round down to 443 or 433. But if it's in the exact midpoint, I'm going to leave it just as this. But what I'm seeing here is we have a big sharp move down, right? And then at this point, an aggressive impulse move off that level. This aggressive impulse off this level, is telling me that there is a parabolic move here. This parabolic move creates a strong area of buyers. Next time we come down into it, right, we're going to see a sharp reversal off that level, right? That's usually what happens. These levels are very important, even though they're not we're not seeing multiple wicks here, right? You can see over here, it's really not, we're not seeing a lot of respect over here, but we are seeing respect over here in that parabolic move. And that is why I will consider it a key level. You could even argue to me that maybe there's a level here, right? Maybe there's a level here. Maybe this would be considered a parabolic move. And I would agree with you, right? 446 was a key level on SPY. So that's something I would include here. That's something I actually missed on the chart here, is adding 446, because you can see we pushed into it. We see a sharp, aggressive reversal off of that level to the downside. This is going to create a strong pocket. So next time we come into it, we're probably going to see some sort of reaction off that level. We broke above it, right? We broke above it without seeing much reaction, but that's the idea, is it's still important because we have that parabolic move. Okay. So just to break down what I look for 2 or 3 wicks off of one area, and I look for parabolic moves. Does this make sense? Can you type yes in the chat if it makes sense? Does this make sense so far? Yes or no. If it doesn't make sense at all, you can say no. I won't be offended. Does it make sense? Okay, cool. All right, so we're gonna go through some more stuff now. I know many of you guys are asking about time frames and stuff like that. We're gonna go through what I look for. So bear with me, right? So this is the basic mechanics, though, right? Looking for multiple wicks, looking for parabolic moves. That's what I look for. Okay. If you see me swatting my hand around, it's because there's a mosquito that just keeps coming back. Another chart here. This is not my chart. I'm gonna go through my chart in a second here, but I just wanted to show you another example of what other people look for, right? This is not my chart. This is literally grabbed off the internet, but you can see here the importance of basic support resistance, right? So you can see you have a key level coming up in this range over here, and then it comes back in again, and it comes back in again. This is going to be not one particular line, which you may consider a zone, right? A pocket of support resistance. That's what I'll do. I'll look for these price interests. Maybe you see price interest over here, right? You can see it starting to come in. This to me would be another pocket of support resistance. So it'll extend it over here, and that's going to be my demand, right? All I'm looking for are just areas where there's clear wicks off of levels, and that's going to create it's going to create either a support or resistance. In this case, you can see here, this would be a parabolic move right over here, a parabolic move, even without these other wicks, right? Even without these other wicks, this would be a parabolic move because we have a impulse move off of it, right? That impulse move off of it is going to create a strong pocket of resistance. So next time we pump into it, we're going to see a short-term reaction off of it. That is what I look for. Okay. Next chart is my chart. So we're going to go over that and spend more time into this. This is the Amazon chart. So what I want to do is shift over to the Amazon chart here. Can everybody see Amazon now? I want to make sure everyone can see the actual chart here because I'm on TradingView right now. I should be on the TradingView chart. Hopefully everyone can see it. Okay. So this is Amazon. This is a trade we had taken multiple times on last week. We had taken it on Thursday. We also had taken it on Friday. And possibly maybe on Wednesday too. We traded multiple times last week. No, I think Thursday and Friday. The important part about this chart is understanding where the key levels come in. So you can see, let's just remove all my levels here. Move everything, all my lines, all my arrows. I want you to focus on 2 things, right? The first thing I want you to focus on is look at this over here. You guys can see how on this chart, that we have a level here at 131.50, right? 131.50. And remember, if it's 131.50, I'm not going to adjust it. I'm going to leave it at 131.50 because it's the midpoint, right? You can see 131.50, 131.50, 131.50, right? A lot of wicks coming in exactly at 131.50. Then you can see interesting stuff. Okay, this is at 131. This is at 131. This is at 131. So is the level 131.50 or is it 131? It's a trick question. It's both, right? Going back to this stuff, right? We talked about the idea that support and resistance are basically the same thing. One is just a line, and this is just a zone. So if we see that there are multiple wicks in the same vicinity, but not at the same exact line, all we're going to do is we're going to create a pocket of demand, right? So going back to the Amazon chart here, we're going to create a pocket of demand here because we have two levels. We have 131 and then we have 130, 150. This would be like a level to level demand or just a zone, right? You can call whatever the heck you want, but this would be a zone. So I'm going to come in here now and I'm going to use a very simple tool, a rectangle, right? You can see it on my trading view. I'm just going to create a rectangle here, and that's going to be my demand on Amazon. And the reason why is because we have so many wicks in the same vicinity, probably 10 plus wicks in the same vicinity. You could also call this, right? You could see it happening, right? You see how this is considered a parabolic move. So this is ticking off not only our rule 1, which is looking for multiple wicks, but it's also ticking off rule 2, which is the fact that we have a parabolic move. So we have two reasons why this is a key level, because we have a crazy parabolic move off of it, and then we also have those historical wicks that also made it a support resistance. So that's why this is a super strong level, because that's not only a basic support resistance, it's also a parabolic move level. So it's going to be a very big area of demand. So I can come in here and I can create a demand between 131 and 131 and 130, 150, and that's going to be my demand here on Amazon. What I'm going to do is I'm going to adjust it now, so it's going to be green, and you're going to see the trading is not perfect. I'm not including the bottom of this wick over here. I'm simply not doing it, right? Because we have more respect in this 131.50 to 131 area. I'm not including this level. Trading will not always be perfect. You're going to have crazy, sometimes weird candles that push it below your key level. But as long as it's still relatively respected, I'm going to keep it on my chart. This is why charting is a visual thing. It's purely a visual thing. This is why right now robots are not able to do technical analysis at the same level that humans are, because how would they know that this is still a key level if it's been invalidated over here? Well, it's still a key level because look how respected it was previously, right? It's an insane respect, right? And that is why I have it on my chart, and that is why it is a very key demand on Amazon. Next key level I can see here on Amazon is if we hold 130, 150, we probably go back to, I would say, okay, maybe we have one level here at 134, right? 134. You can see here we have a little bit of reaction of 134, 134, 134. So I'm going to include that. And maybe it's not a very key level because you can see there's a little bit of choppiness through it, but I'm going to keep it on my chart. Maybe what you can do is if you see a level that you're not, you like, but that you see a little bit of choppiness around it, like a little bit of a consolidation, which kind of invalidates it a little bit, you're going to come in. What you can do is you can create, a different color for it, or you can come in and you can create a different line segment. So you can make it a instead of a regular line, a solid line, you can make it a dotted line, because this would be your like micro level or your smaller level. And then this over here, at 137, this is your macro level. And the reason why it's a macro level is because look at all of the respect at 137 coming in, right? 137, 137. And over here, you have a little bit of reaction at 138. So I'll make that another level, 138. But that 137 is huge. So if we get above 137, we're going to very likely see 138 very quickly. And if you get above 138, you're very likely going to see 140 very quickly. And you see that was 140.16. It should be exactly at 140 because that's a psychological level. And you see here, this is 137. But technically speaking, this rejected off 136.80 probably. But I don't care, right? What I focus on is rounding it to the nearest whole number, and that is 137. Always rounding up if you're looking for upside, and always rounding down if you're looking for downside. I'm going to show you a ticker on Tesla in a second, and we're going to go over the Tesla chart, but you're going to see what I mean by that. Okay, so now you know that if we get above 137 here, we're very likely going to see a push into its next area of resistance, which is 138. So go to 5-minute time frame, you're going to see how quickly this happened. Or we got above 137 and we ripped up to 138 plus, right? And we sort of faded down, bounced off 137. This is actually where we entered Amazon, if you guys remember, from I think it was Thursday. From Thursday, we entered here at 137, beautiful level, right? Beautiful level at 137, acted as a major area of support, and we saw a nice upside move off of that level. This is what we do. Like the whole importance behind trading, finding these key levels is because it helps us find entry and exit points. We know if we're looking for an entry on Amazon, well, we know the reason for use a replay feature. The only way I'd be looking for an entry at Amazon is if we break and retest 137, which is our key demand, right? Our key support level, right? That's what we're looking for. Is we're looking for break and retest these demand zones. And we know if we're in calls, right, we know that we're taking profit at 138 because that's a big level of resistance. And we know the next area, you can see 140, right? But this 140 this is chop, right? This is all just shit zone. It's all just chop, right? So what I'm going to do is I'm going to create a pocket. And I know that between 140 to 140.5 is going to be chop on the chart. And I know that if we push into it, it's going to act as resistance. It's not a beautiful resistance. It's not perfect at all. But I do know that if we pump into it, we're probably going to see reaction off 140. So I know if I'm in calls, I'm scaling out at 138 and I'm scaling more out at 140, right? And you can see how respected the chart is when you use a replay feature. You go to the 15-minute time frame, you can use a replay feature, and you're going to see stocks love to move between levels. It came up, it rejected, it bounced off 137. It pushed a new high after that, pushed all the way into that 140 area, faded off 140, big move down into 137, and then it found support there again and bounced off it and is now pushing new highs. Stocks love to play with three levels. And the reason why is because that is where you have the most buyers stepping in at supports and the most sellers stepping in at resistance. Very simple concept. You look for key tactical levels, you look for break and retests, you get in at the retest of demand, and you get out at the retest of supply. That's a whole trading strategy in itself broken down. Okay, so what I want to do now is I want to shift back to my slideshow. And before I do anything, can I get a pulse check? How is everybody doing? Does this content make sense so far? Does this make sense? Okay. Awesome. Beautiful. We're gonna go over timeframes in a second. When I go over Tesla, we're gonna talk about timeframes. We're gonna go over everything I look for. Okay. Let me go over here. Okay, so this was the SPY chart. This was the internet chart. This was the Amazon chart, and this is determining key levels. Okay, so this is the last slide I wanted to show you guys. Then we're going to go over Tesla and go over a couple more. And go over one more example on Tesla. We're going to talk about timeframes. So, people talk about the idea of like a strong level or weak level. Well, this is where timeframes come in. So the larger the time frame, the stronger the level. So if you see a level on like if you see like a pre-market high or pre-market low, right? So if you go to a chart for a second, let's just say Amazon has, well, Amazon's pre-market high was exactly 140. So I mean that's beautiful. But let's just say it was any other day. This is the pre-market low at 134.90. This is a level, right? This is a level in your chart, or you can see pre-market high, pre-market low is always going to be a level of support resistance, especially when you see something like this where it lines up with its previous day highs. This is beautiful, right? But how do you know whether this is strong, whether this is a weak level, and whether it's respected? Well, what I will do is I have a little system. The first thing is if it's a pre-market level, right? Small 15-minute time frame, 5-minute time frame level, it's going to be a weaker level. It's not going to be a level with a lot of strength. But if it's a level that is on the daily or the weekly time frame, well, that's going to be a stronger level because it's on a larger time frame. So always understand that as you move down from a larger to a smaller time frame, the levels become a little bit less strong. Doesn't mean you can't play with it. It just means it's a little bit less strong. So for example, if I were to look at this Amazon chart, well, I would say, well, yeah, okay, fine. This pre-market low, this for me, if I were to grade this, I grade my levels. So like mentally grade them. I don't physically write down the levels, but what I'll do is I'll say, okay, well, maybe this pre-market low, this is like a 3 out of 10 in terms of strength. But this pre-market high, because it has a previous day high sitting at exactly 135.80, well, that's probably a 5 out of 10, right? A 5 out of 10 or a 6 out of 10, because that's a pre-market high as well as a previous day high, right? So you're gonna realize certain things, and maybe let's just say this pre-market high at 135.70. Let's just say it also was an hourly level or 4-hour level. Then maybe it's 8 out of 10 or 7 out of 10. The idea is you're looking to find where levels are most respected. In this case, you can see on the hourly time frame, I saw that 137 was not only the key level, right? You can see here, key support, key support, key support, key support, turning into support, but it also was the long-term trend line. So this was two reasons to be a strong level. So for me, that was probably an 8 out of 10 on my scale. And I know that 140 is a major level in the hourly 4-hour time frame. Right? I could even go to the 4-hour here. You'll see on the 4-hour time frame, major 4-hour level. I know that that's probably a 9 out of 10. It's also psychological level. So that's going to be a 9 out of 10 for me because we're pushing it. It's such a very key level on a larger time frame. So what I'm going to do is I'm going to sort of mentally grade how strong a level is depending on if it's a larger time frame or a smaller time frame level. Untested levels are stronger. So let's just say, what do I mean by that? Well, let's just say like Amazon. This happens to me, it happens all the time, right? People will come in and they'll say, well, okay, we saw the break and the retest of 137 on Thursday. So on Thursday we caught this trade. It was beautiful. Then on Friday, people were coming in and maybe it bounced once off 137 again, right? We saw 137 bounce another time. So I could zoom in here, you'll see it. It bounced. Let me remove my drawing. It bounced one time over here, and then it bounced a second time, maybe right over here, right? And then they'll ask, hey, can we bounce Amazon again at 137? Because it's still above 137. And their answer is always going to be, yeah, maybe you could look for a bounce there. Maybe it holds support. Maybe it pushes up off that support because it's still holding that support zone. But if a level keeps getting tested, right, keeps pushing down in that level, every test into that level, there are buyers sitting there. So there are going to be buyers sitting there pushing the stock up. That's what happens, right? In order for the stock to bounce, there has to be more buyers than there are sellers for that particular moment. So buyers come in, pushes up. But let's just say that maybe there was 50,000 buyers, 50K buyers sitting here initially. Well, then by that third, fourth, fifth bounce, there might only be 10K buyers sitting there. So even though we're seeing so many wicks, right? Wicks off that level, yes, it's a key level, but it's no longer as strong as it was before because it gets tested and tested and tested and tested. And every test is removing some of the buyers that are sitting there. So then eventually it's going to break. And when it breaks, it's going to absolutely plummet, right? So understand that the first test of that level, let's just say it's a key level, breaks it. That first retest, that is the strongest area. Every time after that is going to be weaker and weaker and weaker, which happens over here. For me, I would have never been here to buy Amazon 137 because it just sat there for too long and kept testing it. And so for me, it's not something I would buy into. So when I look at charts, I don't only judge the level based on the time frame. I also judge it depending on if it's been untested, right? If it's untested, it's stronger, or if there's more tested level, it inherently becomes weaker because it's knocking out some of those buyers. Does that make sense? I know it's a little bit of a weird concept. Does that make sense? I would buy puts, but remember, would you ever buy puts through a support? You'd only buy puts when it breaks that support, right? So you would never, the basic concept of you never buy puts at the support, you buy it when it breaks below the support, right? So yeah, you could technically, if you were a bear on Amazon, you could have said, hell yeah, I'm going to wait for it to lose 137. That would have been your short entry for move back down to 134, right? But that's what we look for, right? We're just judging how strong it is depending on how many times it's been tested. The larger the impulse off the level, the stronger the level, right? This is another basic thing. You guys probably already know it. Let's just say, for example, it's Tesla. I'm gonna go Tesla. Let's go over SPY, right? This level here, 133. This could technically be 133, 433, right? 433 is a level here, right? 433 is the exact low. Because this low led to such a crazy uptick, it's going to be a very key level. So if we pump back into it, we're going to see a very quick reaction off of it. And that's probably why we saw buyers come in so early over here, is because that level was so big, right? The larger the impulse, the larger the aggressiveness off that level, the more likely it's going to be respected. I'm not saying we're going to see a huge move, but I'm just saying it's going to be likely respected because it was such a sharp reversal initially. Likewise, if you were to zoom out on this chart, you could say that this over here, right? All-time highs on SPY, which is 459.50, right? 459.60 or 70 rather. this is going to be a big area of resistance, right? This is going to be a huge area of resistance because look at the reaction we saw off of it, right? That reaction was so large. So we're very likely going to see a not a similar, but maybe a similar reaction if we push back into that resistance. So the idea here is that this is what we look for. We look for larger time frame levels, untested levels, and the more tested that level, they become weaker and weaker and weaker. And the larger the impulse off that level, they are stronger. So SPY using that 433 or that 459.70, those would be very big levels because they were all-time highs and then the 4-hour lows. And the last thing is psychological levels. I like psychological levels. I really don't want them to be like 459.20. I would rather be psychological levels. So it's going to be stronger for me if I base it off a psychological level. All right. It's already 7:45. What I want to do is I want to go over the Tesla chart now. So let's go over Tesla chart. This was a trade that I had taken on Friday. Do not post this trade. I was just in the chat. I was talking, and then I talked about the idea that Tesla broke a very massive level, a huge level in Tesla. And like I said, remember we talked about the idea that look, you could see how crazy this is, right? You can see 250 on SPY, right? Massive level, a big level on SPY, or sorry, Tesla 250. I can go to the 4-hour time frame. This is we'll go over time frames. I chart on the daily, the 4-hour, and the hourly time frames. I go from daily to 4-hour to hourly. That's my whole process is daily, 4-hour, hourly. Right. So if I start off on the 4-hour time frame here, I can see that we have a very big level here at 250. Right. You can see 250, 250, 250, and then some chop around that 250, but still 250, right? We have lots of, and more recently, right, the recent respect is at 250. So even though I see a little bit of chop and invalidation over there, the recent levels are respecting 250. Recent leads in respecting 250. So I understand that 250 is a big level. And I know if we hold 250, it's very likely we push into 260, which is what we saw. But if we lose that 250, we push back down into 244, which is the next key level, right? And then the reason why it's next key level is because you have all these wicks over here and all these wicks over here. So if we go to the Tesla chart now to an hourly time frame, we're going to confirm our level and we're going to see, well, it's beautiful, right? You can see here, look how beautiful this 250 level is. You can see lots of choppiness over here, 250, and then 250 is right over here. And you know that it already retested once. 250. This was technically an upside break and retest, right? This was a break and retest for calls right over here, right? To the upside. Big move off of it. But basic concept of determining strength is that the more times it's been tested, the more likely it's going to break. So if you go back into Tesla's chart, back into the 15-minute time frame now, you're going to see, well, it came into it, it bounced off of it once at 250, even tried a second time here at 250 again. It came into 250. It tried it, right? It tried to hold 250 again. But again, sellers kept stepping in. You got a high volume sell under 250. And as soon as you see a high volume sell under a key level, like a psychological level, a 4-hour, this is both a psychological level, a 4-hour level, and it's had multiple tests. So if this breaks 250, it's very likely we're going to magnet down to the next area of support, which is 244. So we break under 250. We see possibly a little bear flag, right? A little bear flag, a retest into that 250, and a big move down back into 244. This was a trade I had taken on Friday using key tactical levels because I knew that if we got under that 250, we would see it push back down to the next support. This is why key levels matter. Key levels matter because all we are doing is looking for where there is respect and knowing that if you see this, right, you see that there is really no support between 250 and 244. So if you lose that 250, we're going to magnet down into that 244. Another advanced topic for you guys, just to throw it out there. Finishing off my topic today, I want to talk about one other thing here. You could use a tool called the fixed range volume profile. And you can come in and you can say, well, I can almost promise you that if you were to use a fixed range volume profile here, right, you have very high volume at 250 and very high volume here at 244. And everything in between is kind of low volume, right? Low volume area. I mean, it really is a little bit higher volume than I thought, but still relatively lower volume compared to its high node and its low node, because that is where buyers step in and that is where buyers step in, right? You know that if we lose 250, we're magneting down to the next high level of volume, which is back into 244, which is that same support we have over here. And that is what we saw happen on Tesla. Key levels matter more than anything. If there is one way to trade in the market, it's trading with key levels and trading with trend, right? Looking for breakdowns of key levels, breakouts of key levels, and trading with the overall trend. That is how you, that is a strategy in itself. What I want to do now is it's already 7:50, so I kind of want to end here and jump over to Q&A. So we'll spend the next 5-10 minutes going over some questions. 5-10 minutes going over some questions you guys have. Now, yep, the recording will be posted, but just so you guys know, I'm going to repeat it again because I know some people join a little bit later. The last one was sent out to people. It looked like it was recirculated, so I don't want to post this one for very long. I'm just going to keep it posted up for about 24 hours. Then I'm going to remove it. So you guys can all watch it after today. I'm going to post the recording. You guys will all have it, but I'm going to remove it after 24 hours because I don't want it to be sent around again. If that's cool with you guys, I hope that's okay. I want to keep doing these sessions with you guys, but I just don't want it to be like sent out and resold and stuff like that because I just don't like that. So that's the only contingency. I'll keep doing this classes for you guys, but the only contingency is I'm going to start doing that now. You don't have a choice. You're kind of right about that, but you guys always have a choice. I mean, at the end of the day, you guys always have a choice. Say chart. Yeah. So what I will do, my whole process is daily, 4 hour, hourly. When I'm day trading, daily, 4 hour, hourly. When I'm swing trading, weekly, daily, 4 hour. Those are the time frames I focus on, right? Swing trading, these 3 time frames. Day trading, these 3 time frames. That's what I do. That's my process. And I go from larger time frame to smaller. And I go through 3 time frames with every chart. Steve, message me in his stocks only chat, and I will see if I can point you in the right direction. Laurel, can we use fixed range volume profile to point of control? And yes, you can. Exactly, Laurel. You can come in. You can say, well, you know what? Let's just say here, I like my levels, but I want to find if there's any other level that matters, or I want to find how strong my levels are. And you can see stocks like to trade at key levels, right? Key level 1, high volume. This is also a key level, is a little bit lower volume here, a little bit weird to see. Oh, you know why? Because I missed out on price action, right? What I can do is I can come in over here, I can remove this, and I can make this from all the way from here to here, and you're going to see a better indication. Now you're going to see high volume steps in over here at the key level, steps in over here at the key level. We have a little bit of volume stepping in over here, right? Between here and here, that's another key level. And then you have another low volume over here at 220. But that's the idea here is you typically will have higher volume stepping in at key levels. So it's a good way to confluence your support resistance. John Paul, just a note on posting lessons, having the ability to go back and watching the classes over again is hugely beneficial. I just watched the previous class for the 3rd time yesterday. Absolutely. Totally agree. I'm going to post it. Don't you guys worry. I will post it. I'm just going to remove it after some time. I'm thinking 24 hours, but maybe a little bit more than that, depending on how much time everyone needs. Are your zones levels stronger than trend lines? Absolutely. Levels are stronger than trend lines. Key levels are always stronger than trend lines. Trend lines are good, but zones, I mean, trend lines are good, but technical levels will help you pinpoint your entries or exits. Trend lines will help you find trend and play with the overall trend, but it's not going to pinpoint your entries or exits. Support resistance will. So that's why we use support resistance. Is there a method to drawing the box for support resistance, for instance, an entire order block or a candle that is engulfed by the previous candle? Nicole, great question. So what we're doing, right, is you're going to encapsulate the entire wick of that candle, right? So if you're going to come in here and you're going to say, okay, well, I want to draw a zone here on Tesla. Well, you know that the demand steps in here between the bottom of this wick, right, at 233.80, all the way up to where demand started in 235 and change. So all we're doing is we're looking at the bottom wick, and that's where we start our demand, and we end it where it starts, right? That's what I look for. I look for a wick to wick, right? That is the whole idea. So if I draw it again, you'll see here that why is my zone at 212 all the way down to 208? Well, if you go to the 4 hour time frame, you'll see that all I'm doing here is I encapsulate from wick to wick, right? To 212 to 208 is my demand. And that is why I have a big box drawn there, is because all I'm doing is drawing. I don't really, people talk about the ideas of order blocks. Like, what is an order block? To be honest with you, I don't even know what an order block is. People talk about it a lot. I don't know if that even has real meaning when it comes to charts. Maybe it does, but for me, I just focus on what the charts are telling me. So all I see here is I see respect to 208, respect to 212. That's a big zone for me. So I'm going to create a very big demand in that area because it's in the same vicinity. What defines a key level when it wicks multiple times in a certain area? Mitsan, that you basically define it yourself, right? If you see multiple wicks in the same area, that's a key level, right? We're looking for multiple wicks in a key area, psychological levels, maybe big impulses off a key level. That is what I look for, right? That's basically it, right? Looking for multiple wicks off key areas. Is there an indicator for micro levels? You could use basic support or resistance off of pre-market highs, pre-market lows. You can use it's called pre-market. I think there's an indicator. There probably is an indicator. Pre-market high. Yeah, you can use this one. Pre-market high, low. You can use that one where it charts your pre-market highs and lows every single day. That's a small, a simple way to find support or resistance intraday. You could also use an indicator called SR channels. SR channels. I don't really use this anymore, but it does help you find those micro levels. You can see it helps you find micro levels on the chart, so you can use that as well. It's called SR channel. But remember, levels should be drawn manually because there is a certain touch that we have that we're able to find levels better than any AI or indicator. So I recommend doing it yourself, but you can use SR channels and you can use that pre-market high low indicator. Is a fixed range volume profile only used in a larger time frame? Yes. I personally have only used it on the hour. I only ever use the fixed range volume profile on the hourly and 4-hour time frame. Only ever. How far back to bear? That's a really good question. That's a kind of an interesting question. But what I would do, the days back depends on the time frame. So if it's a daily time frame, usually 365 days. If it's a hourly 4-hour time frame, it's usually 180 days. And if it's an hourly time frame, it's usually 90 days. That's what I look for. Okay. How do you get the longer lines in trading to create the level? You do, for me, all you do is you find a level. Let's just say you like this 250, 450 area, right? You see wick 1, wick 2, wick 3. Let's just say you can call this a micro level. Because it's on a smaller time frame. So what you can do here is create a press plus icon right over here, and you can create a horizontal line. That's how you chart them. Do you rechart every night? I only rechart when I update my levels daily. So I'll come in and update my level. So I'll go to SPY and I'll say, well, what do I have to change here, right? And you can see like this is my chart from Friday. Does anything have to be changed here? Well, no. I mean, maybe what I'll do is maybe I'll add a smaller line here. Oops, a smaller line here at the previous day high, right? That's maybe what I'll add, but really no other adjustments are required here. So what I'll do is I'll adjust it daily, but sometimes there just are no need to make any adjustments because it just maintained. If it maintains in its range, right, there's no reason to make adjustments because it's just staying there, right? So you keep your levels exactly the way it is because the support is still intact and the resistance is still intact. Okay. Is there a way to bring stop loss to break even on TOS by a dollar amount instead of percentages on averages? Mitsan, that's a little bit of a different question. Message me in the chat, and I can probably help you with that. Not today. I'm probably gonna head off in the Discord today, but if you message me tomorrow, I can help you with that, Mitsan. When you see a stock break through a critical level and never pull back, is there any way to get in on the trade or just no trade? If you're trading a break and retest strategy, there's just no trade. For me, what I will do is if I see a break of a critical level, so Tesla, this was a break of a critical level. If I see us break my critical level, you see that this is the breakdown here, 250 breakdown, right? Horrible drawing here, but you can see it. This is the candle, right? You draw it into it. That's the candle. We break it. I wait for a little bit of green to start forming on the next candle, and I'll buy into that with a stop loss above like 251 and change, right? So that's what I'll do is I'll scale into it. So I'll, even if we don't get the full retest of 250, I'm going to get in my puts or my calls a little bit early on that next candle formation. But if the next candle just dumps, if it just dumps here, then I'm not going to get filled. It has to go in the unfavorable direction a little bit first. That's what I do. Does Thinkorswim allow you to make practice trades? Yeah, you could use a paper trading account on Thinkorswim. Paper trading account on Thinkorswim. Natasha, 5-minute time frame. I don't really use the 2-minute time frame anymore. 5-minute time frame. I use a 5-minute time frame. Wait for a 5-minute candle closure, then get in the retest. 5-minute time frame almost for everything now. Do you think the video will increase? Well, let's look at the video. You can chart NVIDIA and we can say what's NVIDIA going to do, right? What is NVIDIA going to do based upon basic support resistance concepts, right? We can chart here. We have a big demand here at 480. So we know 480 is the level to watch next week. 480 is a big macro area to watch. And right now we are above 480, right? We're still above this 480 level. This could technically be a bullish retest off 480 for a move higher back into 500 plus next week. But if we lose that 480, right, we lose that 480, we could see a lot lower back into 470, probably a lot lower back into 456. So this is the inflection point. Either we hold this 480 level for a move higher, or we lose that 480 and we see a big aggressive move back down to 470. So that's what I see here, right? Right now, this is still bullish, right? We're still holding over major demand into close on NVIDIA, right? So technically still bullish until we lose that 480. If we lose 480, then it's bearish. How do you find key levels on low volume? I always hesitate in low volume, and most times my levels will hold. Remember, we're charting key levels on the daily, 4-hour, hourly time frame. So I don't even really look at the volume on the daily, 4-hour, hourly. I look at the volume in smaller time frames. So I'm charting my key level well in advance before trading it, right? Do you use time and sales and competency levels? Frank, I do not. I don't use any time and sales or level 2, or very rarely do. Okay. I hope this lesson was helpful. I hope you guys all learned something. What I want to do is get a little bit of a roll call. If you found this helpful and you guys want to see more lessons like this, I would love to hear about it. If you guys enjoyed today's lesson, put a yes in the chat. It would be awesome. So gonna keep doing this more often for you guys. This was supply and demand, pretty much everything I know about it. So what we can do next lesson is likely focus on a different topic. So I don't want to do this again, but maybe in a couple months, maybe in like 2 months, we can come back to this and talk more about it, and go into some more advanced stuff. But this is a really good starting point, even if you are a developed trader. I know many of you guys probably know this stuff already. So I don't mind expecting you guys to come in and think this is all like new material, because this is not new material for many of you guys. But hey, it's probably good just to have a refresher. So happy to keep doing stuff like this. Yeah, well,